Hello guys. On today's episode, we'll be looking at how to properly set a trading stop loss. Most often than not, most of us who are actively trading, I'm sure you must have experienced a situation whereby you set your trading and then it goes ahead to hit your stop loss. After hitting your stop loss, it continues to go in the direction of your prediction. It continues to go in the direction where you actually predicted. Of course, all of us must have had one or two experiences about this thing. Personally, it has also happened to me. It has happened to me in the course of my trading. So today I want us to learn together. I want us to learn how you can accurately accurately set this your stop loss in such a way that whenever your trade hits stop loss, you just know that you have no reason to be on this trade. Actually, the rule is very simple. It's like you put your stop loss. The right place to put your stop loss is where you know that your trading idea is invalidated, or where you know that whenever the market eventually comes there, it means that your prediction about the market is wrong. So before we go into the practical aspects, please, if you are new to this channel, I encourage you to kindly like the video, subscribe, could equally share it to your friends, especially those of them who are having issues with how to properly set their stop loss. And then if you're looking for a community of traders, a community of forex traders, where we continuously look at the charts, where we continuously share trading ideas, I welcome you to our Telegram community. I will be leaving the link at the lower section of this video. You can also follow us on other of our social media channels. We have the TikTok, we have this very YouTube where you're watching this video from. We have the Twitter as well. So let's go right ahead to look at the practical aspect of what we are saying concerning how to adequately set your stop loss to avoid getting prematurely stopped out. So we are going to test this on a number of assets. We're going to test this on a number of currencies. So we'll be starting first with BTC USDT. This is the chart of BTC USD. Let's say this is the current price action now, and then looking at this, you decide to short. You decide to short. The mistakes most people make when they want to set the stop loss is that they often set it at an area of value, which is very wrong. Okay, looking at this now, of course, this is a down, we have this down sloping resistance. And if someone decides to short, what he or she would do would be to go right ahead and set it on this very down sloping resistance, which is actually an area of value. And most times you will discover that these markets could actually go back again. It could make this type of move. It could just let me remove this. It could make such a move that it comes back, you know, does as if it wants to go down, continues on its way up, it takes out the stop loss and then starts coming down. Okay, starts moving down again. Such a thing, oftentimes we see it in most times we see it in the chart. We experience such a thing in the course of our trading. And look at a typical example of what I was just look at this now. Just look at what happened there. Imagine you shorted, let's say, around here, and then you were trying to take your profit somewhere around there, and then the market came down and then went up again, took you out. This was your stop loss, took out your stop loss, came down again, or let's just say didn't take it out, but eventually here it took out your stop loss and started going down. And this is also a very clear example of what I was saying. Imagine you set your stop loss maybe around the value of this down sloping resistance. You set it and you can see that what happened was that markets actually went up, made a high, made a lower high before eventually going down. So we can all attest to the fact that this is a daily experience in the course of our trading. Now, there is an indicator that has helped me to properly know how to set my stop loss. And that indicator is called ATR. ATR simply means average true range, which actually measures volatility. It measures the volatility by calculating the average time range over a given number of times or over a given number of days using a mathematical calculation. We don't want to go into the nitty-gritty of that. We don't want to go into, the whole explanation. That's not what we are concerned with. That's not the essence of this video. So I just want to show us how to accurately use this ATR to set your stop loss so that you don't get prematurely stopped out. So you go to your indicators. These are the indicators we have here. Then select it. Just type ATR average true range. Okay, we've chosen it, we've selected it. So once you click on it, it's gonna show you. Okay, it didn't show. Let's go back again. ATR, average true range. So select it. Once you do that, it's gonna show on your screen to show that you have actually chosen it. It's gonna show on your screen to indicate that you've actually chosen it. What's up, my guys? So on today's episode, we'll be looking at how to properly set your trading stop loss in such a way that you don't get prematurely stopped out. Let's face it, most of us who are actively trading, I'm sure there's been times when after doing your analysis and setting your stop loss, and then the trade takes out your stop loss, reverses, and also starts going in that direction you predicted. It happens to even the best of us, but most times, well, this thing happens because we have not learned how to accurately and appropriately set our stop loss so that we don't get unduly stopped out. So the essence of this video is to guide us on how to properly do that in such a way that if the trade hits your stop loss, you will just know that your trading idea or your prediction is invalidated or you are wrong in your prediction. Okay, so before we do that, I encourage you guys to kindly subscribe to this channel, especially if you're a new viewer or if you're a returning subscriber. I encourage you to kindly like the video, share it to your friends, and then I invite you all to my community of forex traders on Telegram, where we accurately share trading ideas. We look at the markets together in order to be able to predict what actually happens. All right, so let's go to the practical aspect of the video. So for the practical, we're going to be looking at a lot of currencies, but we'll be starting with BTC USDT. Of course, I'm not going to cherry pick these currencies. We're just going to randomly analyze any of them that comes to our mind. All right, so this is the chart of BTC USDT, and we are using the 4-hour time frame. Now, this is let's say you've done your analysis and then you've seen that BTC is dropping. So the question now is, where is the right place to set your stop loss? Where are you supposed to set your stop loss? Of course, the normal thing to do is to set your stop loss at an area of value. That's what most of us do. We'll go right ahead and set our stop loss at an area of view, not forgetting that areas of values are often the place where reverse actions often occurs. Let's not go into that. Let's not go into details about that. Just know that area of values are often the places where reverse actions often occurs. And when I talk about AOV, that's area of values, I mean places like your resistance, your supports, and the rest of it. So these are just typical examples of areas of value where a reverse action is expected to occur. So to properly set your stop loss, we'll be using an indicator called ATR. ATR is actually an indicator which stands for average true range, which generally measures volatility. It measures volatility by calculating the average true range over S number of days or over S number of times. S number could be in 10 days, could be 20 days, could be 50 days, depending on how you chose to configure yours. Okay, so it does that by using a set of mathematical formula. We don't want to bore ourselves with knowing how these mathematical formula are calculated. So let's just go right ahead to do that, because TradingView has already done it for us. So you go to your TradingView, you can see here that ATR is actually one of my favorites. It's in my favorites. It's part of the indicators I've favorited. I often use. Okay, I'm sure you know how to use your ATR. So if it's not part of your favorite, just go to this search and then search for ATR. Once it shows, then select it. Okay, so look at it now. Remember, I'm using the 4-hour time frame. And look at the current value is 944.03 on 4 hour. If I change to a different time frame, it's going to give me a totally different value. You can see 1 hour is giving me 428.35, but I'm using the 4-hour time frame. So you just have to be very careful on the time frame you are using. If the time frame you're using to analyze to make your prediction, make sure it is the same thing, is the same time frame that you're using to select your ATR. These things are very cordial, they're very, very necessary. So it's good you understand them. Now, I was trying to tell us a situation whereby after doing your analysis, you've done your prediction, and then the market goes right ahead, does as if it's moving in your direction. Instead, you reverse it, take out your stop loss and start going in the direction you predicted. Look at a typical example of that. Let's say you had analyzed this, you had done this analysis, and it was at a time it was going down. And let's say you predicted that it was going to drop to maybe value at maybe 60K or thereabouts. When it got to this very place, it reversed and started going up. Assuming you had set your stop loss, let's say around this very value, around this area of value, this down sloping resistance, let's say you set it at around 70K or thereabouts, you can see this thing would definitely take you out. The stop loss would take you out, and then the market would go down a bit, and start going in the direction. Or let's say this was at the point where you entered the trade. You entered the trade, let's say somewhere here, and then you set your stop loss at an area of value, maybe somewhere around there. That's the value at which the down sloping resistance gave you at that point in time. And look at what happened. They can see that at this point, the market went up, went even as high as 72.3, and then dropped again and then started going down. So these things happen. So what this ATR does is that helps you to accurately know the right place to put your stop loss in such a way that if the stop loss gets taken out, if the market eventually hits your stop loss, you would know that your trading idea is already invalidated, and you have no reason to be on that trade. Now look at this is BTC USDT that we are analyzing. Okay, let's say this is the current price is 62,000. Let's just leave it at $62,000. And of course, what you want to do is to short. Of course, this is not, remember, this is not a call. This is not a sell signal. I'm not giving a signal. We are just analyzing the market. So you've decided to short this market. The typical thing every trader would, some traders, let me not say every trader, the basic thing to do would be to put your stop loss around the value of this down sloping resistance, which is actually an area of value. But there is a possibility that this trade could reverse here, could make some do as if he wants to go down, go back again, take your stop loss, and then start going down. These things happen. There's a possibility that this kind of thing happen. But there's a possibility that this kind of thing can happen. But we want to put our stop loss in such a way that if the trade eventually does that, if the trade eventually hits this stop loss, we have no reason to be in this trade. So how do you do that? You first of all look at this swing. We have a swing high here, which is this very bearish candle we can see here. So look at that swing high, look at the value. What is the value? What is it? Of course, every candle has 4 points: open, high, low, close. So what is the highest? What is the height of that candle? Look at it. It's giving $65,500. Now, this is where the ATR comes in. Look at the value of ATR, 958.4 at using your 4-hour chart. So what you're going to do is to add this 65,500 to 958 and see what it gives you. Let's do that together. We're trying to add 65,500 plus what's the value of our ATR? 958.40. So that would give us 66,458. Now, for us to directly predict this, we're gonna, I don't know where you want, whichever place you want to choose your entry, that's okay. So let's just say arbitrarily you want to use our entry as this at 62.5. Let's just put it at that place. What we are interested in is the right place to place our stop loss. So, and then let's say you just want to, let's remove this ATR because we've already gotten the value we are looking for. Okay, so you're looking at a situation whereby this price would maybe go down this low, and then to accurately get your settings, get the value of your stop loss, we're going to select settings. That's the settings, the value, input, entry. We are interested in our stop level, which is the stop loss. Okay, so the value of our stop loss is 66,458.4. Okay, so this is your stop loss. So what this thing eventually means is that in a situation whereby this market, this BTC reverses and starts going up, it reverses and starts going up, if it eventually gets to 66,458.4, nothing should keep us in this trade, because what it means is that the price of BTC is actually going to go up higher. I hope this is clear. Let's look at another example, maybe not BTC. Let's look at a currency pair. Let's say do it with USD CAD, that's USD Canadian dollar. The same thing, the same parameters. We've done the analysis. Okay, I think I've already done the analysis here. So we have an analysis of this nature, and of course, this is not a clean analysis. I'm just putting it for purpose of this class. Okay, so you've done this analysis and you've seen that this Euro USD on the 4-hour USD CAD, I mean, not Euro USD. So you're looking at USD CAD. Okay, so you've done this analysis, you've seen that this thing has hit what? It has hit a given resistance. It has hit a resistance level, and the right thing to do would be for you to short this market, would be for you to short the market. So you've decided to do that to get your rights, to get the right place where you should place your stop loss. Remember the rules. Remember the rules involved. My trade just took profits. That's not what we are looking at. Okay, my trade just closed. It just hit my TP. That's what was shown on this screen. I just removed it. Okay, so we've done this analysis, and then we are predicting that USD CAD would go down. So you've looked at this. So we first of all bring out our value, which is our ATR, which is what we would use to do the calculation. So we select it. Remember, it has to do with it has to be with the time frame you're trading. So we are using 4-hour chart. So right now the value is 0.00215. Now you've chosen to short this. What most people would do, what most inexperienced traders would do, would be to put their stop loss at this swing high. This swing high is what? 1.37628. But I'm saying it's wrong because there's a possibility that this market could just from here now. Remember, we are using the 4-hour chart. There's a possibility maybe if you go to lower time frame, this thing could just go down, do as if it wants to go down, then go up, take out the stop loss, and then start going down. It happens many times. It happens most of the time. So we are saying that you're not supposed to put your stop loss at this swing high. Instead, you're supposed to combine it with the ATR indicator. So what is the ATR indicator? First of all, we have to get the value, which is the high. The high is, look, this is where we are looking at. So once I put the mouse on the very candle on the swing high, you're going to show us the value, which is around the high. Be looking at the high, we'll get something like 1.37628. So we note it down. Of course, as a trader, you need to do a lot of writing and a lot of arithmetics. So the high is giving us, what's the value? 1.37628. That's the value. Now pull out your ATR indicator. That's it, average true range. Pull it out. What's the value? It's giving us 0.00215. So what you're going to do is that you're going to add the value of the swing high, which is the height of the highest point the candle got to before a reverse. You're going to get it, which is 1.37628, and then add it to the value of ATR, which is 0.00215. It gives you 1.37843. So you're gonna do, after doing analysis, so let's just remove this. We are done with it. Let's remove these two ATRs that I showed here. So you get your, after doing that, you just pull up your short analysis, whatever value, whatever entry. We are not concerned with the entry. We are more interested in the right place to place our stop loss. So you go to your settings. What is the value? What's the stop level value? So we have 1.337. We have 1.37843. 1.37843. That's the stop level value. So what this means is that if this USD card eventually reverses and hits 1.37843, on no account should we still be on this trade. We have no reason to be on this trade because our trading idea or our prediction has been invalidated. In other words, our prediction is wrong, so we shouldn't be on this trade. I hope this is making sense. So let's look at the reverse, whereby you want to buy. What should we use to do that? Now let's look at GBP JPY. I don't know if it is on a buy. Okay, I think it looks like it's in a buy. In this case, let's just try to use the 1-hour time frame. Remember what I said? Whichever time frame you're using to make your entry, make sure it is the same time frame you're using to get your ATR value. Don't get an entry on 1 hour and then go to 4 hour to pick your ATR. If you do that, the value is going to be huge. The value is going to be a lot. So even if the trade eventually hits your stop loss, you would see that you will lose a lot of money. So this is GBP JPY. Of course, this is not a prediction. We are not analyzing. It's just for purpose of this class. So let's say this is going up now, and we are expecting that this move would continue and eventually get to this very high. We are expecting that GBP JPY would go back to, let's say, $200. That's our prediction. Let's say we've done the analysis and we've predicted that. So the normal thing is what's the value of this swing low? In other words, look at this is an ATR. We have a horizontal support here, and we have an upsloping support here, which is actually very key. So most times it gets confusing. The right thing to do would be to focus on the recent price action. So, and we know that every time every time GBP JPY hits this support, it has always pushed up. Look at it, hit it here, went up, hit it here again, went up, hit it, didn't actually hit it, but nearly did, and then went up, then came back here again, went up. So we are this is what we'll be interested in. This is the AOV, the area of value we are interested in, which is this upsloping support. So first of all, look at what is the swing low. The lowest swing low it had was when it dropped to a low of 193.644. So with your pen on your trading journal, you have to note it down. So if we have the low of 193.644, that was the lowest point it got to before going. That's the swing low. So you pull up your ATR as usual, get your ATR, average true range. What's the value? What's the value of the ATR right now? It's giving us 0.217. Remember, in the other ones, you were adding. In this case, you're going to deduct. Please get it. You're going to deduct. So what is the value here? We have the value as 193.644. So 193.644. We have 193.644. You deduct the ATR value minus 0.217. That would give you what? 193.427. So exactly that is where you're going to place your stop loss. Okay, that is where you're going to place your stop loss. So just the normal ritual we did, pull up your long in, pull up your indicator, whatever value it gives you. Of course, you're predicting that it would go as high as 200. Let's remove this ATR here. You're predicting that it will go back as high as 200, but that's not where we are focusing on. We are focused on what the right place to put our stop loss. So whatever value it gives you, just do that, so that eventually if the market hits that very support, eventually comes down and hits your stop loss, you have no reason to be on that trade, because what it means is that this GBP JPY would continue to drop. But I think looking at this, I think it has a higher chance of going up than drop, because at this very point, when it hits this very support, it went below it, but it was supposed to come down here, but indeed it did instead a reverse. So the prediction is that it would continue to go up. Of course, this is not a call. So I hope this is clear now. This is simply how to accurately put a stop loss on your trade, so that you don't get unduly stop loss. You unduly stop that. You can do that even on crypto. You can do that on your futures trading. You could do that on anything you're trading. This is exactly how to accurately put your stop loss in a trade, so that you don't get unduly stopped out. Of course, this is my favorite pair, which is gold. I've been on this since morning, and even though it hasn't really made any significant move, but I've been on it all morning. You can see I shorted. That was the notification I got that my trade had closed. So that's pretty much on this. That's pretty much on it. You could also do that on gold. You could also do that on gold. Just the same thing we did. Get the value of the swing low. Get the value, either add or deduct, depending on your prediction. Are you longing or are you shorting? Are you buying or are you selling? Whichever it is you're doing, you know the right thing to do. Add it, subtract, or whichever one it is you want to do. And then that would give you how to properly set your stop loss to avoid getting unduly stopped out. All right, guys, I hope this is simple and concise enough. I hope after this class, you must have clearly understood how to properly set your stop loss, so that you wouldn't get unduly stop loss. So if you like this content, kindly like, share, subscribe, and share the video to your friends and those of them who are still battling with how to properly set their trading stop loss. And I invite you once more to our community of traders on Telegram, where we always look at everything forex. My favorite pair is gold, but most times we could also look at other currency pairs to see what they are doing in order to predict the right movement of any of those currencies. All right, guys. So thank you so much, and I will talk to you guys soon. Answer here. Salutes.